Welcome to the Amber Data Derivatives GUI demo. So basically what I'll be showing here is how to navigate our GUI application and some of the features that we have here on the app. One of the exciting things about working with realized vol data, which is pretty much how the underlying moves, is that we're not limited to listed options markets. So we can go beyond Bitcoin and Ethereum. So a lot of the coins that we support basically the top 100 coins. All this analysis is done on top of daily data. So we collect daily open, high, low, close. Midnight UTC is sort of the reset time for the next day. And our data set goes pretty far back. Our longest data set is in Bitcoin. It goes back about 12 years. And so let me just kind of walk through the analysis here. So our first chart here is on the left-hand side. This is the realized volatility cone. So what's great about this is it shows us the distribution of realized vol in quartile manner for each measurement window. So the x-axis is going to show us the measurement window that we're looking at. So 14 days of realized vol, 30 days of realized vol, so on and so forth. And then we can see the distribution over the date range. So let's just say I want to go back to 2012 and really see sort of the full context of realized vol for Bitcoin when Bitcoin was, in the single digit prices, $7, stuff like that. Now I can really see what that's done. Now, if I kill the max, we'll get sort of a clearer view. And we can see the minimum realized vol seen over past decade for 30 days is about 16. The median's about 65. The interquartile is 91 to 49. And we're currently at 41. So this is giving us a really good contextualization of the distribution of realized vol and how far it can go and how low it can go. You can also pass a different coin. So let's just say I want to look at, say, Dogecoin. Now this data is more limited. So I just want to look at, say, the past 2 years. So now I can see the distribution of Dogecoin realized vol for 30 days. We've seen as high as 222 with a median of 90% realized vol. On the right-hand side here, we can see the realized vol by hour of the day. So again, you can pass in a date range. So let's just say I want to look at year to date, give or take. I can see the most volatile time is 9 p.m. UTC. The least volatile time year to date has been 4 a.m. UTC. And we annualize this to have it in comparable terms to the options market of implied vol. If I scroll down a little bit more here, I can see realized vol by day of the week. I can see realized vol by month of the year. So let's just say I want to see day of the week, year to date. We can see Wednesday is sort of the big moving day. Over the past decade, we can see that Bitcoin has moved in February, November, and December. And then here we have sort of a heat map intersection of everything. If I scroll down a little bit more here, here's a implied volatility cone. So this is basically showing us, if the index price is where it is today, which is 25,800 right now. If I do a vol assumption of, call it 35% vol, now we can see what's a one standard deviation up or down move in, say, 6 months when we're back in March. So now we can see the distribution of one standard deviation is 33,000 to 20,000. So it gives us a good approximation of what prices we can see given a certain vol assumption. On the right-hand side here, I can look at the price performance between two coins over time. So let's just say I want to look at year to date, and I want to compare Bitcoin versus Gods Unchained coin. Now I can basically see what that performance looks like. So we set the opening price as 100%. And now we can see sort of the change in price. So symbol one is Gods. So that's down 31%, while Bitcoin's up 50%. Here's just kind of a mega table with some stats. You can just scroll through, look at market caps, 52-week high lows, realized vol for different measurements, correlations to Bitcoin and ETH, beta to Bitcoin and ETH, stuff like that. On the right-hand side here, this is one of my favorites. This is really the distribution of vol between up days, like closed higher on a day, versus closed lower on a day. So because we're using Parkinson vol, we can basically do a one-day calculation of realized using high-low. And so now we can see the distribution over a given date range, let's say year to date. What is the distribution of realized vol for up days versus down days? So we can see the median vol on an up day year to date has been 4 points higher than a down day for Bitcoin. So Bitcoin has had some upside bullish volatility. If I scroll down here, I can look at the correlation between a certain coin versus Bitcoin and ETH. So we preset Bitcoin and ETH as the comparison coins. Right now I'm looking at Polkadot. Let's just say I want to look at 1 year of history. Now I can see the correlation, the rolling correlation of Polkadot versus ETH or Polkadot versus Bitcoin. And I could turn off the uninteresting plots that I don't want to look at. So let's just say I want to look at 30-day rolling between Polkadot and Bitcoin, or 30-day rolling between Polkadot and ETH. Now I can see that side by side. Same types of charts here below. Here's a beta chart, so just a slightly different calculation versus correlation, but very similar type of thing. Here we can see the Parkinson realized vol over time. Here I can see the close to closed realized vol over time. And then here I can compare two Parkinson vols between two coins over time. So let's just say I want to look at Polkadot versus Bitcoin. I want to see the realized vol relationship over the past 2 years. And now I want to look at that on a measurement window of, call it 7-day rolling. So now I can see 7-day rolling, realized vol between the two. The symbol 1 is Polkadot, which is the blue line. Symbol 2 is Bitcoin, which is the red line. So you can see sort of a spread between those two coins. Not surprising, Polkadot's an altcoin, but you see a convergence between two as the vol regimes come down structurally. And then lastly, here's a really interesting chart. I grabbed this from Nassim Taleb's book, Dynamic Hedging. So basically the analysis here is we're looking at monthly realized volatility. So we take a 1 monthly candle using the high-low method, Parkinson method, versus 30 daily candles. And the idea there is, what is the relationship between realized vol between two measurements? So you can think of an example where, let's say we open at a certain price at the beginning of the month, we have a lot of range intra-month, and we close at the exact same price. Well, now the monthly realized vol is going to be very low. Again, Parkinson method, so the high-low is the main component there, but the daily movement that we see intra-month is going to create a lot of daily realized vol. So the relationship between monthly and daily would be wide in that case. And then when it's closely related, then we sort of have a trending market as opposed to a mean reverting market. So that's something really interesting that you can look at here as well.